What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 58. It's August the 31st, 2023. We made some trades today, so let's get into it. Let's talk about all of our important levels that we have on the chart first. So let's talk about yesterday's closing price, which is down here at 34,956. Now, this level, as of the recording of this session, isn't going to play too much of a role today. We didn't come back and test it at all. So let's go ahead and get into the trades that we made today, and let's start our analysis in the pre-market from the beginning of the screenshot. So coming into the market during the pre-market hours, we see that we had a pretty decent downtrend where we were coming back to retest previous levels of resistance. We were finding rejection right there, and then we saw the down move start to continue from those levels. Now, as the market opened, we did have a large spike to the upside that came back to pretty much test every single last level of resistance that got established before, until we got to the highest one up here at 35,125. And from that point forward, that's when we saw the market kind of start to fall over and the downtrend started to resume once again. So we see a lower high get established right here that led us all the way back down to establish this swing low right here. Now, at this particular point, I drew my level of support right here because I believe that this would turn out to be a higher low, because I was looking at prices come back to retest this blue line. Let's actually talk about the blue line. That's one of our important levels. We skipped over that, but this blue line goes back to support levels that were established in the pre-market, where the market pretty much found lows at this blue line and was never able to break past it. So when the market opened and I saw prices come back down to that level and find support, I was like, okay, I see the demand at that level. And then when I saw prices kind of reverse right here, I said, okay, this could be a potential higher low in comparison to where we came from on this first touch. So I said, okay, I think I have a good understanding of what I'm looking at. But one of the things I talk about all the time is that whenever you're in a downtrend and you see that higher low, don't just become married to the fact that you think that the market is moving up from here. Because first of all, before you can trade that higher low, you need to see the higher low get retested. So seeing the higher low form is just the first thing that you look for, but you don't want to trade just quite yet. You want to see how that higher low is going to be reacted to by the participants in the market and how price is going to react around that level. So if you see prices stay above that higher low and come back and retest it and stay above it, then you can think about going long. But if you see that higher low get violated, you don't want to go long at all, and you want to start thinking about short trades potentially. So that's what I was thinking about when I saw this higher low get violated right here. I'm like, okay, the trend has been down. We violated a higher low, so the sellers are still in control right now. So my first idea was to go short as prices came back up to this level to retest what used to be a previous low that should now act as resistance. But when I saw all of this bullish momentum coming up into this level, I canceled my order, because one thing you don't want to do is just put your order in front of a level and just ignore how the market gets back to that level. If it's a slow, stair step ladder up towards that price level, then you can feel a little bit more confident about having your entry there and keeping it there. But if you have a straight shot back up to that level like we see right here on this green candle, you want to make sure that you don't want to place your order just right there anyway, no matter what you see. You want to make sure that the situation in the market aligns with you properly before you actually take that trade. So what you want to do is cancel your order, let the momentum come in, let the buyers do whatever they need to and push the market up as far as they want to. And then when you start to see the market kind of reverse, that's when you start looking for your shorts again. So when prices broke back down through that level of what used to be support but is now acting as resistance right here on this red candle, when it broke, I was looking for the short trade. So I put my order back where it was before, but prices broke past it and never came back until we had this move back up to the upside, which actually led me to trade number one. So on trade one, I shorted here expecting for resistance to hold, but I exited once I saw the buying momentum coming in again. And that makes sense because I shorted here based on this the close for this candle right here, which was about at 35,060, somewhere around there. So I'm saying in my head, I'm thinking that if this has been a level that was a major closing point before off of a long tail wick that bounced off a major support, which was a major level today, then more than likely once we get back up to that level after we've broken down through it, it should act as resistance, and that should be a good candidate where we should see the market reverse and then see prices start to move back down. So that was my initial mindset going into that trade, but I started seeing the momentum come in, and the same way I got rid of my order over here when I saw this green candle, I figured since we're in the same general price range and same general price area, it makes sense that the buyers came in and showed momentum again. You know, the buyers are strong down here for whatever reason at this particular time period in the market. So I said, you know what? It just doesn't feel right being short right here. So let me see if prices can come back, retest this level, and then get rejected. Now, they did retest that level and reject, but they also established a higher low. So once I see the higher low, I'm like, okay, let me let the bulls come in and do whatever they need to and push the market as high as they want to right now. And if the sellers ever step back in and I see bearish signals, I'll start thinking about the short trade again. So after this higher low, we pushed back up, and we came back up to what used to be the swing high for that area that happened immediately after trade one. And once we broke past this level, I want you guys, let's zoom in a little bit, and I want you to pay attention to this one red candle right here, because it meant a lot in terms of me not taking trades and me actually entering trades. Because once we had this first higher low after a downtrend reversal that doesn't come too far away from a major level of support, I'm saying, okay, the buyers are in the market. Then we see a higher low. That's definitely confirming that the buyers are most surely in the market right now. So once we push up and push past that push past that previous swing high, I say, okay, once we push past it, we actually pull back on this candle, the red candle that we're talking about. So look at how at one point this candle was completely green and looked very good in terms of continuing to make its way, maybe potentially all the way back up to the highs for this previous higher low that we had a little bit earlier, right? So I said, okay, I have a good idea of what I'm looking at, but usually I will go long based on a higher low as prices come back to retest that support level. But the reason I didn't do it today is because I got caught up in a move exactly like this one yesterday, and it didn't work because there are different levels to the strength of a higher low. A weaker higher low is a higher low that has a longer tail candle wick. It might close as a doji. The body might not be as strong as you potentially want it to be and as large as you potentially want it to be, because the larger the body for that higher low candle, the more, I guess, confidence you can say that all of the buyers in the market have at that time period. So anytime you start seeing long tail candle wicks or dojis acting as a higher low, it doesn't mean that the market can't go higher from that point, but it means that you definitely want to be a little bit more cautious, because the probabilities of it continuing higher are starting to decrease a little bit because the buyers are a little bit skeptical at these levels. And that's what long tail wicks and dojis kind of tell you. So if we go back to yesterday and we look at trade number 2, I ran into this exact same scenario yesterday, but I traded it the wrong way, because look at how when we opened yesterday, we had this uptrend, very strong uptrend, but then we kind of started to fizzle out right here, and we got 1, 2, 3, 4, 5, 6, 7, 8, 9 straight candles, all with wicks that really couldn't close past this point. Now, eventually we did break up past that level, right? And we had a very similar candle to what we saw today. So if you look at this candle from yesterday, this red candle right here that we have circled up, notice how it's not too different from what we saw today, where it's a long tail candle wick. The body isn't as strong as we want it to be. And, you know, it's just coming at the higher end of an uptrend. That right there is not the strongest higher low, which means that prices could continue. Always, that's a possibility, but they also have a chance of breaking past that and breaking down below it. Now, yesterday, I went long as prices came back to retest that level, because I said, look, I don't care how strong the higher low is. I'm going to take that trade no matter what. But that's not always the case, you know, and I took a loss on that, and I learned from that, though, because when I came back today, I saw the exact same thing, and I said, okay, well, if I traded the exact same way as I did yesterday, I shouldn't be surprised to get the same results. So I was able to actually skip the long trade on this entry, and that turned out to be a good decision, because that higher low ended up getting violated. So once prices broke back down below that higher low, I said, okay, if prices come back to retest that level and they get rejected from there, I will short it. So that's pretty much what I was able to do at trade 2. So I shorted here as prices broke past a previous higher low and then came back to retest the level that it just broke past. And then I had a good exit. And I think the good exit, that part is important too, because if you look at some of the trades I took yesterday, we go back to trade number 9. That was really the trade number 9 and trade number 4. were opportunities where I made good trades, yeah, but I left a lot of profit on the table. And pretty much what I learned yesterday is that if you're in a good trade that you take from the best possible levels in the market, and the market is trending in the direction that you traded in, you hold that trade until you get to a major level that just makes so much sense to take profit at that you have to. But if you don't see a level like that, then you just hold that trade until you see any type of signal come in that goes against your trade. So on yesterday, on August 30th, on trade 4, I was short and I got out a little bit early, but I really had no reason to. And then on trade 9, I was long and I got out a little bit early, but I really had no reason to either on trade 9. So what I learned from those days was that instead of thinking about getting out like halfway in between where you want to see prices go, just because you feel like you don't want to give profits back, don't think about it like that. Instead, think about, if you were initiating a new trade, where would you get in? Or if you were on the opposite side of your trade, would you step in right here and go against it? So when I had trade number 2 open, I thought about initially going and taking my profit right here at the blue line at around 35,035, and that would have given me my normal typical scalp target. But I said, if we have major levels of support down here at 35,010 as well as 35,025 on this one wick that we had at the open when the market first got started, then more than likely I should use those levels as the points that I want to aim for when I'm trying to take my trade. So I had an opportunity to get out right here when prices came back. They hit the blue line, not exactly, but came close enough, and then they pulled back. I thought about getting out right here, but then I was like, look, if you were not in a trade and you were looking to go long right here, what signals would you have that would tell you to go long? The only thing you could be able to say was that prices bounced off of support, but that's not just enough in and of itself to open a position. So if you can't come up with multiple reasons why you should take that long trade, that means that you just stay in your short trade and you hold it until you get back down to your major levels. And I decided to get out at this wick in particular because I think that this wick held a little bit more importance than this low that we made right here. And I say that because this wick was the first one that we actually got coming off of the open. So if anything, I expected prices to reverse a little bit right there, but they actually continued. But I believe I made the right decision getting out right there because that level to me just made sense. So today was pretty good overall, man. That was my last trade of the day. I wanted to keep it simple. I thought about trading more. You know, I saw my setup come in a little bit later right here when we had this higher low get established coming out of a double bottom. We saw prices come back, retest that level, and then move up. That would have been a good trade. But one thing I've also been working on is keeping it simple. And my goal in the market is to just come in and make good trades every day. And when I have a good trade like I did at trade 2, where I analyze everything perfectly, I read the market the right way, I avoided taking the bad trades that could have been very tempting, but I avoided it. And then I took the right trade at trade number 2, had a good entry, had a good exit. Once I have a trade like that, I feel like I did what I needed to for that day, and then I can come back the next day and try and do it again. So I decided to go ahead and call it, and I think I made the right decision by doing that. And I would say that overall today, it was a decent day, man. I did the right things that I was supposed to. I had some mistakes that I made yesterday, but the mistakes from yesterday were not new lessons that I was learning. It was just all of the same old lessons, and it was just me not being as focused as I should have been. But I came in today and I was like, look, I have a plan. I know what I need to do. I'm only going to take the trades that align with my trading strategy. And if I happen to take any trades that don't make sense, I'll get out of them before I can take a full stop loss on it. So that's what happened on trade 1. And then on trade 2, I was able to come back and read my plan perfectly in the market, look for my setup and take it. I didn't hesitate. I didn't let it run away from me. I didn't chase it if it did run away from me. And I pretty much made the right decision. So the mistakes that I learned from yesterday actually helped me make a decent amount of profit today. And I think that's how it should be when you're operating in the market. You know, there will be days where you do have to take those losses like I did yesterday, but your L can either stand for a loss or it can stand for a lesson, and it's up to you to determine what that's going to end up being like. So overall, I would say the one thing I need to work on, going back to the mistakes from yesterday, is still just coming into the market with 100% focus. I was able to do that today, but now that today is over, we got to pretty much, you know, pat ourselves on the back. That was a good job, but I got to come back tomorrow and finish off the week strong. It's non-farm payrolls, so it's going to be a lot of volatility in the market. So I need to be on point because every entry has to be perfect when you're trading in a high volatility environment like we will be tomorrow. So that's pretty much what I'm focused on going into tonight's back testing session. And that's all I got for you guys. I hope you were able to learn a lot about learning from your mistakes and a lot about the strength levels of particular higher lows that you see in the market, and understanding that the stronger the higher low is, the stronger the possibilities of the market moving up, and the weaker the higher low is, meaning that you see dojis or you see long tail candle wicks, the weaker that higher low is, the higher the probabilities of prices actually violating that higher low, and you seeing a little bit of selling start to form below that higher low. So hope you guys was able to pick some clues up on that today. I'll be back tomorrow somewhere between 9:30 and 9:40 a.m. But until then, you guys, take it easy.